Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is JJ Kinahan. He's the Chief Market Strategist at TD Ameritrade. We're going to take a look at the April reading of the Investor Movement Index, known as the IMX. And JJ, investors, they bought stocks reflecting where they believe consumer demand will return. Before we get into those individual buys and sells, let's get a little bit of background on the IMX and what you noticed this month.
Sure, Joe. First of all, thanks for having me as always. And the Investor Movement Index, for those who aren't familiar with it, measures our clients' actual trades, not what they say they're going to do, what they actually do. And it takes into account not only equities, options, futures, but fixed income. And then we put a volatility factor on there to really kind of even it out over time. And so it's very interesting. So the biggest thing I noticed this month, Jill, was that although April was an amazing month for the market, our clients actually had a little bit less exposure to the market overall, even though they bought stocks. So people may say, how is that possible? Because we'll talk in a moment about some of the names they bought that were more, if you will, speculative or longer term plays. But a lot of the names they bought read like the Dow, Bank of America, Wells Fargo, ExxonMobil, Microsoft, Disney, AT&T. So a lot of the stocks stayed within this range of should perform as the S&P 500 performs, very highly correlated. And then there was the other group that they bought, as you referenced, that are going to take a little bit of a longer play.
Yeah, and we can certainly see that when we talk about Main Street buys and sells. As you had mentioned before, we have the Bank of America in there, which is typically in there, but it's been a while since we've seen them pick up travel stocks.
Mm-hmm. Yeah, absolutely. And so we saw the airlines be a buy, particularly American, Delta, and United, as well as the cruise lines. And you know, a couple of things about that. First of all, as we speak, the airlines are having a rough day on the backs of Mr. Buffett's comments this past weekend and at the Berkshire Hathaway meeting. And so, again, if you are investing in that type of stock, you have to think that the return time is going to take a while. You really have to spell out how long you're going to stay invested there, because even if they were to, I always use something I call the middle seat analogy, and that is, even if they were announced to today that all is safe, how safe would you be wanting to, not that you ever want a middle seat anyway, but how long would it take till you would actually say, okay, I will sit in the middle seat? And I think that's going to take quite a while till people are in the mode that they are willing to accept that. So if you're investing in airlines, I think your ramp up time is significantly longer. Now, they did invest in cruise lines too. And we had Carnival announce this morning that they're going to start July 1st. What's interesting, and you and I talked about this last month, Jill, was at the time, Carnival, Royal Caribbean were, the favorites of our millennial population. Now the total population has come in to start buying those. But it does make me think one thing, and that is, if I owned a cruise line, I'm pretty sure I know who I'm going to market it to, that being millennials, because they were kind of the first ones to say, you know what, we see this business coming back.
That also reminds me of the middle seat analogy too, though. Just how quickly are you going to feel comfortable coming back? And even though if people do start to come back, it only means that they might be coming back at 50% demand. It's going to take time for us to get used to what our old normal may have been. But the net sales, I thought were really interesting, with the exception of Tencent. I don't think I've ever seen either three of the other names on the IMX before.
No, and the two that really caught my attention, Otis Elevator and Carrier Corporation. Now, certainly not businesses that are, as they would say, sexy. Elevators and HVAC. But what it shows me right out of the gate is a real tentativeness when it comes to building, particularly buildings that hold office space, et cetera, going forward, because those are two companies that are going to be big in these, high rises, et cetera, and maybe even condos to a lesser extent. So I don't necessarily think it reflects on the residential market quite yet, but very, these are stocks that people buy and hold for long periods of time. So to see them both show up at the same time in April as they rallied makes me think that there is some real hesitancy around the corporate real estate market going forward.
All right, and millennial buys and sells, again, they are in the travel space.
Yeah, again, they love the travel stocks. They love the adding another cruise line again this month. And so but again, I also think about it this way. I think of myself in my, late 20s or early 30s. You tend to think that you're a lot more invincible. And so it's like, well, yeah, of course I'll travel. If an MGM, if I can go to Vegas and I can get a super cheap flight, if I can get a flight for like $70 and stay there for $70, of course I'd do it. And I think that that's kind of the mindset. So it does show, theoretically, it shows you who the first group is that will start to travel. Where I think, to your point earlier, people who are a little bit older are going to be like, I'm not so anxious because I don't want that exposure. So, again, I think you're seeing it as beaches open up today. You're seeing a lot of younger people on the beaches rather than older people, because I just think psychologically you tend to vote or you tend to buy stocks, and you're like, okay, I would take advantage of this, so why wouldn't I buy that stock?
Yeah, plus we're all stuck working inside today. That could be another one of the reasons why we're not out there. So looking forward, and I alluded to this before, the market has reacted significantly over the past 5 to 6 weeks, of making its way back from those lows that we saw in March. And while that's good news and we're getting more positive news on the healthcare front, and yes, the market is a discounting mechanism, I still think as we go through certainly this quarter, the third and fourth quarter, while companies might not be doing as bad as expected, the fact of the matter is revenue is still going to be down. It's going to take some fancy work to get earnings close to estimates unless analysts bring them all the way down. JJ, do you think that we still have more volatility in the markets to go outside of the election coming up? But there's not much positive in terms of earnings and revenue, and it's really hard to discern what valuation is with so much coming in from the Fed and the U.S. Treasury helping to support valuation.
You're 100% correct, Jill. And I find it very hard that anybody wouldn't expect volatility going forward. To your point, we're going to get Disney tomorrow night. There's one where, how do you evaluate that? That's the ultimate middle seat. Would you go to a Disney park right now? And those, besides the happiest, they're some of the cleanest places on earth, as they say. But to the larger market from that, again, I think that's why I said about the airlines and travel stocks at the beginning, you have to have a longer time frame, because even if, all states will say get back to work in the next couple of months, to your point, it's going to take some time to ramp these businesses up. Just think of a simple example like a local restaurant. How are they going to handle a bar? People have to be 6 feet apart. How are they going to handle the tables? Now you start taking that on a bigger and bigger scale. In fact, I just got done talking about corporate real estate. How do you handle a lot of corporate real estate if people have to be 6 feet apart? Are you going to have to work A groups and B groups? So there's so many questions to be answered that don't happen immediately. It is going to take a while to ramp things back up. And with that, I think the analysts are going to have to lower some of their expectations, because it's unrealistic expectation, in my opinion, to imagine that these businesses are going to be back to the types of revenues that they were.
All right, JJ, great to have you with us as always. Thanks so much for
joining.
Always
a pleasure. Thank you, Jill. Have a great day.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.